Hey, this is Danielle from Black Business Boom and Black Owned Nashville, and we are live with Mitra, our mortgage lending expert. And today we're going to be talking about interest rates in today's market. And as a buyer, how can you navigate and make sure that you're even getting the right rate? So let's jump on in. Mitra, how are you today?
I'm doing very well, thank you. How are you today, Danielle?
I'm fantastic. I can't complain at all. I'm wrapping up soon, so I'm happy about that.
Right.
Well, let's talk about interest rates right now. And this is something we've not really touched on before, but I know it's a big concern for a lot of folks. So tell me, what are your thoughts right now on the current situation and the current interest rates that we're seeing?
So, rates have definitely been on the rise, actually rising faster in the last 2 to 3 months than we've seen in the last several years. I've been doing mortgage lending for 10 years and I've never seen as much volatility in my entire career. So, with that being said, it's just important that, if, especially for people that are very, close in their purchasing power to really start, you know, getting very serious and locking a rate in, if possible that way, because I hear people saying, I'm going to wait till the end of the year. Well, based upon the way things are looking, that rate at the end of the year could be even much higher, which could also minimize, the ability and how much you're able to buy when it comes to purchasing a home.
That is great. Great information. And I know a lot of folks are just overall thinking they're going to wait this market out. And, because there's just so many things going on, especially in Tennessee. House prices are up, interest rates are all over the place. And so, how can people really strategize around the current interest rate situation or just the current situation overall? What is a way that people can actually strategize and make sure that they're still able to make the moves they're looking to make, but not being impacted greatly by the interest rates?
So, one piece of advice I would give is to really have realistic expectations. If you're getting pre qualified or pre approved by a lender, let's say you're pre approved for $400,000, it's probably good to actually kind of scale back because if that's at the top of your price point, really that 400 could really be 350. And so being realistic, because a lot of times we have good intention, but as buyers, we get out in the market, we fall in love with something and we are pushing right up against that 400, we end up over it. And with every time that the rate increases, that also increases, the debt to income ratio as well. So what I've been telling people, just like we've been hearing this quote, yesterday's price is not today's price. Yesterday's pre-approval is not today's pre-approval either. So, again, scaling back, not going all the way to the max of your pre-approval. That way you're giving yourself some wiggle room. And especially when it comes to new construction, because, a lot of times new construction may be very far out. If it's at the end of the year, I'm going to go ahead and boost up the interest rate just to make sure that the debt to income ratio even works that far out to make sure that the borrower can still purchase the home.
That's great. Did not know. We learning all kind of things today, Mitra. I love it. So when it comes to keeping abreast of what's going on in the market and how, like checking rates, how often does it make sense for someone who's in the market to actually be checking those rates?
So this is kind of like a catch 22 for me. You want to be checking the rate to be realistic and to see where you are, but then also we can kind of get a little bit, obsessive compulsive about it and be checking the rate every single second. That's not doing us any good either. We need to really just like in our lives, find a place of like mental peace. So, if you're very serious about the home buying process, then at that point it does matter. And I think that having that sense of urgency, also having a good real estate agent that can get it done in this market, because being honest, like not all realtors are the same. There are some that, have had a lot of success in their career, but in this market, that's not really the case. Or, finding one that, has really good relationships, because relationships are everything. And sometimes, that can even dictate, they know that this particular realtor is good for it. Maybe they've already sold some other ones with them. So that really matters as well. And, for anyone that even, needs a referral of that form, I'd be happy to provide that because, I do work with realtors every day and I'm able to kind of see, where that's going as well.
I love it. So we talked about the fact that some folks are feeling like they're going to wait it out, see what happens. And we know that there's been a lot of fluctuation. So how patient should someone be? Should they be giving it to the next month? Do you think it's time, just go ahead and get locked in? What do you think? How patient should someone be?
So you have to be patient in the sense that you don't want to, have yourself getting frustrated and then throwing up your dreams of home ownership altogether. And I kind of have been, comparing it to like, as a kid when we're growing up, like our parents, for example, our moms may have told us something, but they've been through it before and they have the wisdom, but we don't always understand that. So we are like, what, we're going to bump our heads and figure it out the hard way, when really we could have just listened to them from the jump and saved ourselves time, energy, and heartache. So the same thing applies, to this market when it comes to buyers. And I've been having this conversation. It's like, you can listen to your team, get yourself a great team, a great realtor, a great lender, combination or duo that's really going to guide you, that's going to fight for you and help you navigate through that patience, because it is very frustrating. I've been seeing that, and you really want to have like a safe space and good connection, with your team to be able to navigate through that storm. So that way, now when your mom tells you, it's like that learning curve can be much short. And you're like, you know what, I'm going to listen to what you're saying. And this is just, a very recurring theme that I've been seeing, over and over lately.
That's great advice. Having your team in everybody I talk to, any industry, I feel like that's a recurring theme is having the right team of folks around you and making sure that they are qualified indeed and they know more than you, and listening to those folks as well. So that's why I'm really happy to have you and help to guide folks through this process, which can be a lot. In your professional opinion, and I know this is something that's we just don't know, like we don't know. People are calling for recession, all kind of stuff, so in your opinion, do you think rates are going to continue to go up?
So I don't have a crystal ball. And if I knew the answer to that, then I'd be, probably not even on this call right now. But, the truth is, based upon the trends and what they're saying, and really what we're seeing is quantitative easing and trying to, recover the economy, I do anticipate rates to continue going up this year. Maybe even, I don't know exactly when it will end. There are some people that are projecting that, rates could get up to 6%, which we're already, in some programs getting close to that, but even up to 10%. So,
what?
Yeah.
Well, I haven't bought a house in a long time. So
right. Hopefully, these are predictions, but we don't know. So that should be even more of a sense of urgency, to get out there if you are interested, because I'm telling you that 6% rate is or that 10% rate is going to feel much different than the 10% rate as well. Now, on the other side of it, I think that we as consumers are a little bit spoiled in the sense that, rates have actually been much higher than what we've even seen now with these 4 or 5, even, pushing up on 6%.
Really high. I had no idea they had gone that high.
Yeah, I mean, they're up there. And especially in the last month, I have people that, have been locked in, and now, 30 days later, that rate looks much different.
And what happens when that happens? Like if you're in the middle of negotiating and kind of getting your rate determined, going through the process, and your rate goes up, what happens then? Like what does that look like?
So essentially, to get locked in, you should have, a property and a contract. That's what it takes, that you have, executed a contract between yourself as the buyer and the seller. So when that has been the case, then at that point you can go ahead and lock in the rate. And it, it has a certain term, whether that's 30 days, 60 days, 90 days, whatever that looks like. So, doing that gives the security, of the interest rate. But just to be out here looking, you really can't lock a rate in until you actually have a property. So again, creating that urgency, getting yourself out there, and, you can't make any shots that you don't shoot and try to take. And that means, actively putting offers out there, having your realtor do that in order to, get under contract.
Man, that is rough. Especially in this market where, you're making offers there. People are coming in and outbidding you in cash. It's just, it's all around a very daunting process. What are some key mistakes that you see people make and that we can try to avoid in this process to ensure that we can get the property that we want, or a property that we want, while also securing a decent rate?
So, I would say to, again, going back to the realistic expectations, not putting in offers at asking price. A lot of these homes are going, over what they're asking. So you want to put your best foot forward. I mean, if you do have cash to do, an appraisal gap and to pay the difference if it doesn't appraise, that's going to be a huge benefit for you. And also utilizing, down payment assistance programs. I rave on the program that I have that's a 0% down conventional loan, which one is a great strategy in this market because in certain areas, a lot of sellers aren't even really looking at FHA loans. So that conventional loan really gives you a leg up. And then if it's 0% down, let's just use that $400,000 number. Typically you're putting 3.5% to 5% down. So on conventional, that would be $20,000. Now, if you haven't put that money down, you have that $20,000 to play with, whether that be, over asking with the appraisal gap or, just having more money, towards your closing costs. I think a lot of people have been waiting and they are not always aware that these programs exist. And you may very well qualify for it and be ready now and not have to continue to keep saving money and then having to deal with interest rates that are higher, later on. So it's really important, to, I think one of the biggest things that I love about, in this group, people that have reached out to me is that a lot of times sometimes they get pre-approved. They're like, I didn't even think that I was ready or I could do this right now. So that's like the most amazing feeling to me to see people, yes, show up for
That's
themselves.
so exciting.
It's so inspiring to me because I know it's scary. It's a scary process. We're hearing all these things. Oh, the rate's going up, the values are high, but what do you have to lose? Because you may be so much closer than you even think or know. And sometimes, people are ready and I can give them a pre-approval letter. Sometimes I'm just doing a few little tweaks, do this, get your score up. You're just, some points off or whatnot, but you really don't know until you show up for yourselves and see where you are.
Man, that is amazing. Like, that really made me happy. Because I mean, imagine, there's so many things in life that we'll talk ourselves out of. Don't apply for that job. You're not going to get it, or you're not going to get that loan. You can't afford to do that. And then just the feeling when you surprise yourself and what you're able to do. Like, I've been there, and that's just an amazing feeling, especially something as big as purchasing a home. Like, this is something that you can literally use to create wealth for your family. And so that is really exciting. I love it. So if someone is ready and they feel like, hey, let's give it a go. Let's see what happens. Maybe I can get approved. But if not, I love that you said you can give them some tips on, here are the things that you have to do to get ready. How can they reach you to get started in that process?
So they can go to my website at www.moneymitramortgage.com, and there's a link that they can fill out the application. I'll even, attach the link below. If it's not,
we have it in the caption.
Okay, awesome. So you can just go down here, click that link, fill out the application, and get started, doing that. And then also, you feel free to email me. If you search within the group, you'll see, there's a flyer with my, phone number, my email address, and I, look forward to, working with you, guiding you through that process, and really showing you how to use your home as the biggest investment vehicle that we most often ever even make, and how to turn that home into your own bank, because that's what it is. And so I've just been urging people, like, that same house that you're complaining about, that's $400,000 that, last year was $300,000, the year before that, $250,000. If that same house is going to cost you $450,000 at the end of the year, would you bet on yourself and show up and complete the application right now? Because all you're going to be doing is complaining and, over and crying over spilled milk, when really you have the opportunity to get started right now.
Yeah, a lot of folks think they're going to wait out this market. And meanwhile, the interest rates are going up, the house prices are going up. There are more people moving to the area. We don't know when things are going to change.
Exactly. Especially in Middle Tennessee, Nashville and surrounding areas, because there's so much development. You have to follow the money. You have to even get in front of the money, not even follow it. And, all these developments that are coming up, all these tech companies that are coming, there's a lot of money here. Sometimes we don't understand that if we've just been here, we can't see outside of our own bubble. But, I urge you just to take a look at what's going on around you, because showing up for yourself and making that investment, you could very well be sitting on six figures of equity in the next year or two.
And that's the great thing about it is that, I mean, you're building equity. We sat, me and my fiance sat and just talked about, some folks we know that have been renting for a really long time, like 18 years. They have been in the same apartment for 18 years. We crunched the numbers. Like, we were like, oh my God, they've given these people all this money over the
Mhm.
last 18 years. Imagine what type of equity they could have had. They could have paid off a house by now and been able to sell it in this market. So, many times we're sitting back waiting and waiting and waiting on things to change when we need to change. It's us that needs to change, or our mindset that needs to change, or maybe we need to work on, our credit or whatever it might be. But it's time for us to look internally and figure out what we need to do to get started and make the changes we need to do to take advantage of the market versus being scared of it or running from
Mhm.
it.
Right.
This was wonderful, Mitra. I'm excited to have you as always. Learned a lot here today. I had no idea the rates were up like that. So if I went and applied for something right now, I would have been shocked. One last question. Once someone applies, or let's say when they're getting prepared to apply, what should they have handy? Like what numbers or things that should they be prepared to get entered into that application?
So the main three components when it comes to a loan that I look at are the income, the down payment, and the credit. So having their income information readily available, especially if you're self-employed, go ahead and upload the last 2 years of tax returns because that's what I'll be using to calculate that income. If you're hourly, it would be really great to see your last 1 month of pay stubs as well as the last, 2 years W-2s. And really, if you have them, the last pay stub for the last 2 years, especially if you have overtime and bonus, because I'm looking
Mm-hmm.
at averages there. I can't just use that. I can use the base, but I need to see some numbers to be able to calculate that. And then, the credit, I'll pull the credit. So we'll see what that middle score is. And that's what we use as lenders. And then, down payment, if there is a down payment. If not, when I say down payment, I'm talking about assets and let me see the money that you have, for cash to close. So making sure you have enough to cover the closing cost, if you're using a no down payment loan.
Okay. Wonderful. I'm excited again just to have you excited that folks are getting their applications in. If you're tuned in, you got the link. It's right in the caption. Follow that link, get your application in, see where you stand. You may surprise yourself, but if not, Mitra is here to guide you through the process, let you know what you need to do to get ready. Amazing session again, Mitra. I'm really honored to have you as part of the team, and we'll see you again next month.
See you next month. And thank you so much. It's a blessing to be here as well. Thank you.
Yeah.